Okay, welcome to the Swing Trading with Cycles channel. We're going to do a review of natural gas today. I've been extremely busy over the last couple of months, so I haven't been able to post. But I do think we're at pivotal moments across markets, so I do want to give a few updates, and I'll try to post more often now. I just had some stuff happening, all really good stuff actually. I was able to close on a house in a super competitive market. That took up a lot of sort of mental energy and some other things, but again, all good stuff. So let's go to natural gas. We're looking at a seasonality chart for UNG, and this just gives you a percentage probability that it was higher, let's say, for a given month. And this tells us that April is generally the best month, and August is the second best at 62%. But I mean, that 79% hit rate in April is amazing. But here's the crazy thing. If you look at the natural gas chart, this is your monthly chart, just kind of zooming out a little bit. What candle is this? That's right. It's the April candle. That was our low, 1.946. Quite the coincidence, right? That 79% hit rate. And we're obviously now here in July and about to come into August, which is the second best month. That tells you that we may be leaning to. So that's helpful context, but I think if you just kind of look at this, look at the chart itself, like literally zoom in on these monthly candles, again, you have your low in April, and that, by the way, excuse me, happens to be month 34 of this longer term kind of cycle. You had this big long advance for 26 months, topped out in August 2022, and then look at this waterfall decline. We've now been consolidating. I mean, notice this whole move, the last since March, has been inside this range, inside like a box essentially. But importantly, again, if you zoom in, after this low made in April, it's now been making higher lows. That's a higher low. That's another higher low. Now, a question of where does this decline stop, and does it remain a higher low? It obviously needs to stay above the low here at 2.136. So you have clear levels, and the potential that April was your major low. It matches with seasonality. 34 months would be just around a 3-year cycle. It makes sense, and obviously this was a very bullish cycle as much as it sort of rallied. So if we zoom into the weekly chart, well, actually, let's look at the daily, because I think that's actually a little bit more telling and actionable. So it would appear that this daily cycle topped out on day 18, which was, what is that, June 28th. That was, so we had an 18-day rally. The daily cycle before that had a 25-day rally, albeit a pretty choppy one. I mean, this rally, like this decline, almost gave back this whole rally, but we did end up making a higher high on day 25 into a day 33 low. And so this suggests we're on day 29 right here, or Friday was, I should say. I should say this is July 15th, 2023. We are getting close to where you would expect a low. And structurally, as long as the low can remain in this neighborhood, you're good. We're good to go, right? So this is setting up again. You think about that monthly chart, like zoom back out. There's still a lot of upside. No need to catch the bottom tick at 1.946 by any means. But this tells you the bias is to the upside, and there is evidence out there that the cycle low may be behind us. Now the catch is, if it's not, and we're going to make another lower low, that's also good too, because that's probably going to end up being viable. You'll just need some patience, as always. And so so thinking about the daily cycle, we're probably going to, so to be clear, put a finer point on it, we're probably heading into a daily cycle low soon, which means we would expect to probably break below 2.480, like around this neighborhood, maybe even kind of test this area. Again, if we get a really bearish daily cycle low, obviously. But that, you would expect a reversal and then another rally. The last two rallies were, the last one was 18 days. The one before that was 25. Again, albeit super choppy. Remember, this thing was used to having 7-day rallies before. So that's a change in character, to rally for 18 days, or to rally for 25 days and then rally for 18. So that bears watching. And again, that bigger picture tells you a lot. Let's look at UNG and Boyle really quickly. it's the same chart. They're just different levels. Just give you a sense. Again, like if we look at the daily chart, we can see this thing topped out on June 26th. It's been in a downtrend ever since. That was your big swing high below $7.58. Once we drop below that, that was your okay, need to be cautious. And we actually closed the next day below it, and then a big flush lower. And I mean, look at this, just a textbook downtrend. Went down, made a lower high, another move down, another lower high. So now you'd expect we get another lower high, maybe another move down. Because if we're at day 28, these cycles tend to be in the like mid 30s, like 35, 33 days. So we probably have another 4 or 5 trading days of downside. That's not a prediction. It's just what we tend to see, obviously. We could reverse at any point, too. And if you look at the monthly chart on UNG, again, remember, these things are going to perform not as well as natural gas itself. So if possible, you're probably better off trading on the NYMEX itself if you have the wherewithal. This is just an inside candle right now. So notice we talked about, like we looked at that natural gas chart. It made its low in April. This actually made its low in June. So it made a lower low when natural gas held. The month of April was green. So that still, again, coincides with this seasonality. So it remained green. And interestingly enough, June is also a month where, you do, like, it's not one of the worst months, like in the 30s down here, right? So if we go back to the UNG chart, you're on your daily level, that level that we talked about that we probably will kiss for natural gas. Well, there's a gap right here. So that's a pretty logical sort of area, like 650, something like that. I'm assuming Boyle has a very similar sort of area. So we'll look at what that is, right? So there's a gap for Boyle at something like $55. And also remember, Boyle did a reverse split, as we knew that they would. That's how these things prevent themselves from going to zero. As the number gets lower and lower, approaches closer to $1, they say, all right, we're going to trade it up like 10 shares for one. I'm not sure what this reverse split was. But that's the lay of the land there. Again, if you zoom out, it's very likely that we actually made a long-term cycle low. And we'll actually just look at LNG, which is Cheniere Energy, to get a sense. This is a natural gas derivative. I should say it's a company that is, tends to move somewhat correlated with natural gas since they're a producer. So this thing made a low in January of this year and flirted with it in May. But we're actually, so for LNG, I'd say the breakout level or area really is in the early 160s. And the all-time high is 180. So still a nice little move up from there. And I believe this also pays a dividend as well. So back half of the year might be a good one for natural gas. Speaking of which, it's actually helpful to visualize like that 6-month chart as I just thought of it. So let's just see what that looks like. I'm guessing it's just consolidation at this point. So if we turn this into the 6-month chart, yeah, let's get rid of this stuff. So 6-month candles, that doesn't look awesome, but it's a very new candle. Obviously, it just opened. This is the candle that you dripped that, for the first half of 2023. So this is a pretty ominous setup in the sense that you can't really be too bullish until we make a high above this candle, which is 4.394. So you're basically saying you have to go up like 70, 80%, and that could still become a lower high. So that's important. Just again, like really zooming out, one has to be careful, make sure you're using those stops. And I also would say the broader market is probably is probably headed to all-time highs itself. So risk reward is probably better there. And I'll do a separate video about that, of course. But that's the lay of the land for natural gas. Thanks for watching. And again, I will be posting more regularly again, and I'll focus on those sort of pivotal moments. Thanks for watching.